Good day, fellow investors. Over the last year, copper prices have been pretty stable. However, lately those have really gone down, down, and down. And the thing is that at some point, these low prices will hit rock bottom, which will create an opportunity to invest with low risk and high reward. Because copper and copper prices consequently are cyclical, so we need to understand the cycle, the fundamentals, the exuberance related to trading, so that we can here and there take advantage of that cycle and make good money. And how does the cycle work is perfectly explained by this headline, where just 5 months ago Goldman came out predicting copper at $15,000 per ton. So really, Goldman copper price breakout, risk of extreme scarcity episode, February 11, 2022. Let's check the price. So here, February 11, peaking on Goldman's prediction, another peak, maybe it was JP Morgan here, who knows. And since this prediction, where they predicted 15,000, what was this, 10,000, we are now at 6,000, or at 3.2 pounds per copper ounce, or at $3.2 per copper pound. So very, very different than what was predicted here. And now Goldman retreated, got called, and now they are saying that copper prices will likely go even lower at 6,500 by the end of the year. Now, of course, they are not retreating from the long-term 15,000 projection for 2025, but still, it is a bit different than what they were saying earlier, and we have to understand these ups and downs. And to really understand these ups and downs, you have to follow these cycles, understand the industry, and that's what I've been doing for the last 7 years. Those who started watching this YouTube channel 5 years ago know that we were all about copper then in 2017. The best investment I had was Nevsun, so a copper miner, also zinc miner, and my analysis was when the stock price was at 2, that the minimum value is 6. It didn't materialize to 6, but it went to 4.5, this is Canadian dollars, it went even higher to 4.5 US dollars as Yin Mining took the company over. So that was how I made money there. Then, of course, 2019, I also made a video here on YouTube. The long-term copper investment thesis, you'll regret not having copper in your portfolio. And you can see here, 2019, when I made that video, copper was at 270, and then it exploded on exuberance on cycle, and now it is reverting. So I hope some of you made money with us twice on copper, and now as copper is going down, we have to again understand where is the bottom, which gives us a margin of safety for purchasing copper. And to understand that, we have to analyze the fundamentals of copper, and that's something that I have been following also for 7 years. If you want to check this a little bit deeper, you can go to my stock market research platform, and if you scroll down on the sales page, if you go to my curriculum, now I'm looking at more and more copper miners, so I just updated also on London last week, and if you just click here, you have old content for indicative purposes, but you have here the copper sector analysis. October 2021 update, now I'm much more detailed because this was at high prices, now I'm going at low prices. However, I see here that it is at free preview, so you can click here and read most of it. This is the investment thesis that I had for copper, at what prices. This will likely change as I elaborate on it. These are not open links, but you can read something on London here, and the 2020 investment strategy, what's going on. And perhaps the most important thing that shows you how deep I went with copper is this. So this is something I did in November 2020. I went through all copper miners, how much they produce and what are they planning for growth. So how is that supply developing? Because I wanted to really get a sense of supply from the field to compare it to what other companies are saying. So pretty detailed, and that's what we do here. If you want detail, if you want fundamentals, low risk, high reward, patiently waiting for those cycles to develop, this is the channel to subscribe to. And also for more, check my research platform where I'll go deeper into the details of copper miners and likely, when the opportunity is right, strike big. In this video, I want to discuss the copper price situation, what's going on and what's impacting copper prices so that we see that big volatility there. Then I want to discuss the fundamentals, because the fundamentals are the thing that you can hang on when it comes to investing. Discuss the investment analysis strategies, how to invest in copper, and then also my plans for the future. If you enjoy this, just smash that like button and enjoy the video. Let's start. Now, copper prices have been volatile as we have seen, but there are three key factors that we have to understand when it comes to investing in copper. That is the short-term activity, supply and demand, and then traders emphasizing everything, the long-term lead of copper miners, and then also the fundamentals around everything evolves. If we look at copper prices, those have been long-term very volatile, from 3,000 here in 1996 down to 1,500. So already this is a 50% decline. Then as China boomed, emerging markets demand booming, we have had this super cycle. High prices here led to increased investments and low prices here. Low prices led to low investments and high prices here. So that is the copper cycle, but especially in the short term there is more. There is the short term cycle that's exacerbated by traders. If we look at copper prices, you can see here how when the trend gets going, it's pretty much unstoppable. And this is, okay, supply and demand, but also copper bets. People are entering the field because it's pretty predictable how much demand and supply there will be. So traders go in and really wreck the field to stabilize at some point, and then when it starts going down, traders even go short there and really make money on these fundamentals that we'll discuss in a second. So these jumps with copper should not be something unexpected, because some of it is fundamentals, but a lot of it gets really emphasized by trading. Then when you get into such a short-term supply and demand situation, plus the trading around it, then you have to understand the completely opposite situation that miners are into. To build something like this, to build a mine like this, to plan it, to invest, to create everything around infrastructure, takes a decade, let's say. So it has taken on average 16 years to move mining projects from discovery to first production. So when you have to build something like this, and then also disasters can happen, here you can see here the mine is completely destroyed, but when you build something like this, it takes years to create. When a mine is built, they cannot know whether 2-3 years down the road there will be a recession and lower copper prices or higher copper prices. They need to dump their copper on the market to get cash flows, to pay for interest, for debt, for this, for that. So they cannot think, oh, copper is high, low, we cannot do this. No, they have to dump it. And that's also what is going on now. High copper prices, all the miners that I analyzed for now have plans of increasing production in the next year or two. If we get a recession, that production hits the market, copper goes down, 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 until that reverts and gets back to the trend. That's how it goes. But then also there are the fundamentals that are the line that we have to stabilize around that crazy volatility from speculation trading and wrong planning. And perhaps best to watch these cycles is to watch the inflation adjusted copper price. You can see here how there is some stability into it, and you see how, okay, bad times, good times, here everything was about the internet, nobody ever will build anything, that's why all the money went to growth stocks, like it was the case here in 2018, 19, 20. So that's something. Now we have had the commodity booming, inflation and everything, but that's also always reverting to the mean. So if you adjust by inflation, you see that there is some stability long term. So taking into account these three things really gives you a better picture of how to approach investing in copper. And now we'll dig deeper into really the long-term fundamentals, the supply and demand, expectations of long term, because Goldman says 15,000, which is a pretty big jump, but let's see what's expected there. Now, let's dig into the meat of this copper analysis video. We have on one side super cycle discussions, copper to the moon, and on the other side we have China slowing down, recession, copper in the drain. Who's right and how to play this? The answer will be found if we understand the supply and demand, the timing, and how that works and how that impacts copper prices and copper investments. S&P Global and Market, now part of them, really made a good analysis and overview of what the market, Goldman and the others are thinking about copper, and that's really something good to look into to understand copper and the copper market. And the question is, will the looming copper gap cut the electrification, renewables, and all the mumbo jumbo that is now the main narrative? So they are already assuming a gap. No matter what, there will be copper prices to the moon because of higher demand, but let's see how realistic that is, and even more important, not really whether it is realistic or not, whether the projections will be linear or not. If you understand that, you can make a lot of money on copper every 2-3 years, because the world is usually about to end every 2-3 years, and that's all you need to make great copper investments. So let's immediately dig into the key findings. Unless massive new supply comes online in a timely way, the goal of net zero emissions by 2050 will be short-circuited and remain out of reach. Copper demand is projected to grow from 25 million metric tons today to about 50 million metric tons by 2035. This is a huge expectation, so doubling in 12-13 years. This is a big bet, and I wouldn't take it as granted. And then, of course, if demand doubles, the chronic gap between worldwide copper supply and demand projected to begin in the middle of this decade will have serious consequences across the global economy and will affect the timing of net zero emissions. Of course, then copper would be at 15,000 or $5-6 per pound, which would really make issues because there won't be enough copper to do this. And the plan is, in the rocky road scenario that you will hear always, the talk will always be about the rocky road scenario, not the other possible scenario. We'll discuss that is a huge shortfall, 10 million tons shortfall in 2035 if they don't increase production. So 20% of the supply level required. So really crazy here. And then no matter what happens, copper demand will outpace supply in the forecast period up to 2035. So this is the projection they have, copper usage doubling in just 13-14 years, and then mostly on a big jump here on energy demand, but also a big increase into non-transition demand. So from all the emerging markets growing and developing from the current 17 million metric tons jumping to about 30. So that's in line with 4-5% economic growth there. And then we have to be careful about, okay, will half of the global copper be used for renewables, yes or not? Depending on how that renewable situation really develops on the long term. If we look at their projection, global refined copper consumption per capita is growing, is expected to grow now that we switch everything to electric. So the expectation is that already from 2025, as Goldman said, we'll have copper at 15,000, at 40,000, because nobody is investing, nobody will mine it anymore, nobody will refine it, nothing. And this will be a destruction of the 2050 net zero emission goals, and everything will be terrible. This is the marketed scenario. But then you have also a high ambition scenario. If everything goes well, there will be some deficits, likely up and down, and then even surpluses as the growth is not needed anymore. So which scenario will be correct here? That is very hard to predict. and maybe even irrelevant. If I look at these two scenarios, I think that 1 year when things are really good, the rocky road scenario will be the main situation and copper prices will be high. When there is a recession, China slowing down, this or that issues, and issues are normal in business, in life, in this world, then the other scenario will be right, with surpluses, with this, and there will be panic, and there will be the volatility of copper, something that we have to watch to strike when necessary. Everything looks really good here, market balance, but when it comes to copper, you have to understand the main driver, and copper consumption in 2021, world total 25 million tons, mainland China almost 14. So 54% of the global copper is used in China. So investing in copper now depends first and foremost on what China does and what happens there, how it evolves. And that's why you have to watch this. But this is not sexy to watch. Sven, why should we watch China? Blah, blah. Nobody likes talking about that. We should watch this. Electric vehicles, powertrains, robotaxis, because that's cool. That's what makes everything nice in life, and that's what makes your YouTube channel boom. If you talk about Tesla, you will have 1 million subscribers. If you talk about China, you will have none. But that's something else. The key here is that they expect a huge jump in electric vehicle, battery storage, transmission, distribution, a lot of energy, plus the jump in emerging markets. And the jump in emerging markets is actually the key here. So also including the transition to new things. But this is a nice picture that I found from Egypt, how there aren't any traffic lights in Cairo. So that's also something to think, okay, it's very nice to think about electric transition and everything, but I think it will take a long time to create the infrastructure to go from no traffic lights to really electrification, Tesla, robotaxis going around Cairo. It will take some time. Therefore, I'm really, let's say, not skeptical. I hope it happens, but I'm thinking maybe it won't be 49 million tons. Maybe in 2035 will be 40. And then you have no supply gap, and then you have copper prices reduced to the cost of production, and that makes a huge change in your investment thesis. It is possible, it might not happen, and when it comes to investing, you have to think of, okay, what can happen, what doesn't have to happen, and invest when the worst case scenario is projected and you still make money in that worst case scenario. And when you buy there at those lows, worst case scenario, I make 5% a year dividend, thank you. And then when the market gets exuberant again, when the world ending story changes with super cycles, then you sell. And that's all I know about copper practically. Plus, China is transitioning from infrastructure building heavy economy to more services, and here they assume that China's demand will grow as they also transition to robotaxis and everything, so that's okay, but you never know how will that evolve. I hope to see Indian demand much higher, but it is not still expected, so that is still a long way to go to reach demand like China. So more from the rest of the world than other, and they really expect a boom rest of the world copper demand. Very interesting. But to go back to the rocky road scenario, they see low mine capacity utilization or constant and recycling rates to be held constant. There is something that happens when prices go up and down. When prices go high, then also the recycling gets more interested, more scientists working on that more and more, and then you have more demand and supply also. So from a high ambition scenario, which is then my margin of safety investment, that mine capacity utilization with technology and everything will increase, recycling rates will also increase, and then subsequently fall as demand wanes and lower prices. So that's something that we have to think about when it comes to investing. And I'm thinking, okay, at what point copper prices and miners will be low enough so that I make money even if this high ambition scenario materializes and it's not 5% growth here, let's say, but maybe 3% growth. And I want to make money whether it is 3% or 5%, as it was just 2% in the past, in line with global economic growth. So we have the high ambition scenario, okay, some deficits, and this will be likely much more volatile, 1 year deficits, 1 year surpluses, up and down, depending on what the recession will be. But this is really a rocky scenario, is really extreme to expect. So I wouldn't go this far. I would look this as, okay, when the market expects this, selling. So we have the two scenarios here, and now it is time to discuss, okay, when to buy and when to sell, and let's dig a little bit deeper into the expectations and how I see those expectations developing. So the scenario 2x demand in 14 years, and they always expect things pretty linearly because that's how these analysts are trained in school, and they don't have their own money on the line, so they don't think, oh, what can go wrong? Let me just give you an illustration here on what can go wrong. So this is, let's say, a long-term trend, but what happens if there is a recession because of the big debt cycle, because of higher interest rates, inflation? So over the next 2023, 2025, so not 35, but just 2 years, forget about this 35. Let's say next recession, and then demand is just stable with a small decline, and then the next step forward is not from this high base, but this high base, and then it grows, yes, 5% per year. And here again, there is a super cycle when it is time to sell from buying here, sell here, and then we go again deeper and deeper. If this is happening, copper is at 2.5, not at 5, for a few years, as all the miners we have mentioned earlier are increasing production now in a lower demand environment. That's really then a bust for copper, and that's what I'm waiting. But because when this happens, copper at 2.5, I know that no matter what, if I can find a good investment, I make money no matter what. Low risk, high reward, that's value investing. And if we look at copper miners, now they're all about electrifying the future, and this is from Freeport, and this is also something that I really love. Their Q1 presentation, and they already show you how much money they will make at copper at 5. They don't show you how much money they will make now at copper at 3.3 or even lower. And this exuberance is something you have to be very careful about. If we go to Glencore, of course, average grade of copper is going lower, means higher costs to mine. Average reinvestment also low, so exploration very bad. So everything is great for copper if you look at copper producers. But let me give you some other insights, which now drives us to really copper investment and the volatility related there. I apologize for the blur here, but it is irrelevant. This is the 2030 expected C3 cost curve when it comes to copper miners. And what really strikes here is to understand that these copper miners, the marginal producer, sets the price for everybody. So copper price is expected at 4.5, around 5, because these producers set the price as they cannot produce for cheaper. But if copper demand is just 2% lower than expected, then you can see the copper price going already below 4. If it is 3-4% lower than expected in 2030, you can see also the base scenario for normalized average copper prices around 3.5. Of course, in times of exuberance it will be 5, in times of panic it will be 2.5. Maybe everything will go just 50 cents higher as we have inflation, but when you look at the high-low price ranges, when it comes to these cyclicals, at 75% of the cost curve is usually the bottom that you can put all of your money in. And that is much lower than we have here. So at 2 250, that will be panicky time. In 2016, 18, 19, we have seen 1.9, 1.8 if I remember well. So this is something where these guys stop producing, that everything settles down, finds a new mean, and then when things improve, then things again explode. So this is something to understand really, really well, how these things work, at what prices. Now we are at 330, at 250, 220 is something really interesting. But keep in mind, it doesn't have to go here. It can stay at 330, it can bottom, then it can quickly go back to exuberant times and $5 per pound. It can really happen in the next 6 months. We can be again at $5 per pound. I don't know what will happen. I'm just looking at the low risk, high reward investment solutions and positioning. So don't expect things to be linear, because that's not copper. Copper really goes up and down in volatility, in expectations, and average demand has been growing at 1.1, maybe 2%, 1.5% over the last years. And now suddenly they expect 5%. But if it is just 3%, expect a huge difference in prices over the long term. Plus, if you look at copper prices, high prices increase supply. So look at this. From 2007 to 2012, really high copper prices, with the exception of the bust during the recession copper buys. But you can see the impact there, as higher prices were for a little bit longer. You can see the big jump here in production around 2012, that then led to lower prices for almost a decade, as everyone was running away from copper, except for Sven Carlin, that was telling you to invest in specific miners. And if we look away from the S&P global market analysis, if we look at historical situations, if we look at the current global reserves, we can mine copper for another 30-40 years. If we look just at the resources, we can mine copper for 100 years. So there is plenty of copper. We just need the technology. This is from the United States Geological Survey. I think they are non-profit, so they say things as those are, not related to investment bankers, IPOs, etc., which is something to always keep in mind from whom you get the analysis and situation. So if you look at this, they say no projects, but there are plenty of projects in the box for copper situations. So possible future expanded capacity for all miners there can add 10% of current supply. So that's already into building, and they are planning to add this 10% supply, which at 2% growth is 4 years of growth. And if that doesn't happen, if copper demand doesn't grow for 4 years, copper prices will be very, very low. So you have to understand that copper prices go up and down. The lower you buy, the better it is. It can always go lower, so you have to be ready to dig deeper, add more money, and try to catch that bottom, because you make the money when things revert. Of course, you need to own good things, but that's something we don't discuss in this video, as that's the core of what I do on my research platform, analyzing core miners and finding the right investment opportunities. Sorry, I cannot share that for free on YouTube. The conclusion is that the world is about to end every 2-3 years, which is the best time to buy copper. You want to invest when there is a margin of safety, 75% price on the copper curve, and then really finding the right miners that don't have debt issues, growth issues, this or that, or even perhaps make an ETF or diversify across a few good miners, understanding the risk and reward. The key is low price equals high return. And keep in mind, I repeat myself, copper can get really, really ugly. And then you might think, okay, then I can diversify across an ETF. No, not really. 50% of the ETF, the top 10, are 7 businesses that are not even focused on copper. Grupo Mexico, railroads and everything. They own, yes, Southern Copper, but this is a copper focus. Grupo Mexico not, Glencore, everything else. Alongside copper, BHP, iron ore, Zine, mining, copper, gold, tech, a little bit of everything. Sumitomo is just a group, and only then you get some copper miners, and Boliden is also mixed, I think. So not really an opportunity to be properly exposed to copper. This is just for them to get some fees, because this is not copper. This is not copper miner. What I do, I will look at all of them. I already started. I hope the market will give me more time before it bottoms, maybe have a longer bottom so that I can really understand and find the best picks. I'll likely go to 4 or 5 picks to diversify a little bit, because these are miners and you don't want to invest all your money into something and then this happens, because then your money is gone. So a lot of volatility, a lot of issues, a lot of this, a lot of that, but the fundamentals are there. I'm using copper now to film this. It goes through a copper line or fiber to your video, to this, to that. So we really need those copper for electricity, for everything. So there is a fundamental line across crazy volatility, and if you're smart, you can take advantage of that, as we did twice in the last 7 years. So for the detailed copper mining analysis and process over the next year, check my research platform, check other things that we do on YouTube for more investment ideas. Thanks for watching, smash that like button, and I'll see you in the next video.